Having discussed the major cryptocurrency exchanges in India, how can a participant or trader in retail or institutional segment who wants to trade cryptocurrencies open a trading account on a cryptocurrency exchange? Each crypto exchange has its own account opening formalities. We walk you through a general procedure for opening a crypto trading account in India. To start with, download the mobile application of the exchange on your smartphone or access the exchange website. Next, enter your personal details such as name, email ID, mobile number, etc. You need to upload the KYC documentation. This would typically be the tax ID such as PAN card, Aadhaar card, passport, voter ID card, or other acceptable ID proof for the address verification. Some of the exchanges may also validate or verify the KYC of the individual using their bank account. An email or SMS verification is also usually sent during the registration process. Some crypto exchanges may allow for deposit and withdrawal of funds within certain limits, say for example Rs 10,000, until the KYC is verified. Crypto exchanges may accept online funds transfer through net banking or UPI. Each mode of funds payment may have a fee associated with the same. Crypto exchanges also allow for deposits and withdrawal of cryptocurrencies from the participants' crypto wallets. After opening the trading account, the participant is now set to trade cryptocurrencies, coins, or digital tokens. Now we have gained knowledge on which exchange platforms that operate in India and how to open an account with them, but for a participant it is still confusing which one exchange to choose to trade on. As we mentioned earlier, this is a global market. A participant may well choose to trade on international exchanges. It is borderless market and can be done. Exchanges have been known to go bust or been hacked. You need to take the time and effort to do your own research prior to choosing an exchange. Well, we make this understanding easy. We take you through some major parameters you may want to study before opening an account with an exchange. An important checklist for shortlisting a cryptocurrency exchange. This is similar to a list of must-haves for crypto exchanges, a sort of a checklist minimum criteria that crypto exchanges should meet. Some of the criteria are: verify the reputation of the exchange if it is trustworthy. Check the robustness of its technology if it has got hacked. Understand the exchange fee structure and ascertain the impact on your trading activity. Ensure there is no hidden cost. Ease of navigation of the user interface for client convenience. Method of payment when buying coins. Some exchanges allow debit and credit cards, but some only allow for UPI, while some others allow coins and fiat. Liquidity is very important on an exchange. It indicates how active the market is on that exchange and how easy it therefore becomes for a participant to enter, exit a trade. A participant can check out the arbitrage opportunity that exists across the exchanges. And if you want to trade in smaller unknown altcoins, check if they are offered on the exchange. Lots of big exchanges offer all the major coins which have seen traction over the past year. If you are interested in staking your coins or lending them, then ascertain if these services are offered. Getting into more detail on how to select a suitable cryptocurrency exchange, as seen on the screen, the first criteria for shortlisting the cryptocurrency exchange is regulatory jurisdiction. The regulatory jurisdiction where the trader is situated becomes important for determining the choice of cryptocurrency exchange. For example, India does not have full capital account convertibility and does not permit trading on foreign exchanges through the liberalized remittance scheme, that is LRS route. So, Indian participants need to rely only on cryptocurrency exchanges based in India. The user interface of an exchange needs to be simple and easy to understand for beginners or novice or first-time participant as well as experienced traders. Participants should choose cryptocurrencies exchanges that have high liquidity, that is, trading volumes are high. This is possible if there are a large number of trader base who have registered on the cryptocurrency exchange. Liquidity is extremely important during times of high volatility to enable traders to exit positions with low impact cost. Exchanges offer pairs to ease transaction and ease of doing business on them. Participants who would like to trade cryptocurrency coin and tokens that are less liquid need to opt for smaller exchanges that host such cryptocurrencies. It is also important to consider the reputation of the exchange, the score or ranking based on all parameters before choosing the exchange. None of the cryptocurrency exchanges and wallets are completely 100% safe from cyber theft of wallets. Participants need to be cautious while using the wallets provided by exchanges. They should preferably choose options for storing wallets with reputed independent wallet service providers using cold storage, that is, offline storage of the private keys or non-custodial wallets. Multiple signature wallets are preferred to ensure that more than one authentication is required for accessing the wallets. The ranking, popularity, transparency, and responsiveness to customer determines the overall reputation of cryptocurrency exchange. Choose one which is very responsive to customer queries. Customer support for addressing queries is critical to establish confidence in a crypto exchange. Finally, it boils down to ascertain the trading fee the crypto exchanges charges. Some exchanges have their own tokens for fee payment by users. Tech robustness of a crypto exchange is of immense importance. It has been found that in time of extreme market volatility, when trading activity is at peak, many exchanges crash or slow down so people cannot trade as per their convenience. Low latency due to superior technology infrastructure is critical for order matching server engine. Participants based in distant geographical locations would benefit due to low latency of crypto exchanges. Algorithm trading and high-frequency trading (HFT) have resulted in lower latency requirements. Server co-location in data centers is the contemporary trend in the crypto exchanges. The front-end interface is extremely important for all customers. This increases the ease of use at time of transacting cryptocurrencies. The interface should provide all important information such as order book, trade book, crypto portfolio valuation, funds balance, etc. Most participants are familiar with trading in equity markets and know the workings of an equity exchange. In our next topic of discussion in this session, we highlight the major differences between cryptocurrency exchanges and equity exchanges. There are several differences between cryptocurrency exchanges and equity exchanges around the world. On screen, there are details of the major differences between an equity exchange and a cryptocurrency exchange. Regarding the account opening process, customers in equity markets need to undergo a tedious and long accounting process. This involves opening a trading account with the exchange, depository account for dematerialization of shares, linking of the bank account for credit or debit of funds, and issuance of power of attorney to the broker for debit or credit of funds or equity securities, and also required to furnish the KYC documents for verification. Customers can open trading account with cryptocurrency exchanges and perform KYC through an automated process. They can commence trading instantaneously after account registration with minimal formalities. Regarding regulatory oversight equity securities, exchanges are largely regulated in most developed and developing markets. They contribute immensely towards the development of capital markets in the economy. Equity exchanges enable corporates to raise capital through issuance of equity securities and related products. On the other hand, governments and central banks of a majority of countries are yet to implement regulations on cryptocurrency exchanges. This is largely due to the lack of expertise and knowledge of cryptocurrencies and blockchain technology among regulators. The entire crypto asset industry has been in existence only in the last decade and has gained popularity only in the last few years. The bigger question is how to regulate an industry that is entirely driven by software technology with data that is encrypted using latest cryptographic techniques. The issues have resulted in regulators slowly realizing the need to regulate the crypto asset industry worldwide. Raising of capital on equity exchanges is through issuance of equity securities. Initial public offering (IPO) and follow-up public offer (FPO) are the usual methods for issuance of equity securities. Cryptocurrency exchanges facilitate raising of capital through the issuance of coins and tokens. This is implemented through initial coin offering (ICO), securities token offering (STO), etc. The cryptocurrencies are offered either based on a third-party agency to audit the issue or based on an audit by the cryptocurrency exchange itself. Capital market ecosystem intermediaries are segregated based on their broad roles and responsibilities as follows. Equity exchanges primarily provide the platform for issuance of equity securities and their trading. The electronic trading systems provide seamless connectivity between front-end trading systems and the exchange's order matching server engine. There is a clear and transparent segregation of roles and responsibilities for the clearing and settlement of obligations through a netting mechanism. This is performed by the Clearing and Settlement Corporation. This largely decreases the counterparty default risk because the Clearing and Settlement Corporation assumes the role of a counterparty to all buy and sell transactions and hence mitigates counterparty default risk. This process is commonly referred to as novation. Crypto asset market ecosystem. Intermediaries are still in the formative stage of the development. Cryptocurrency exchange have a multifunctional role and responsibilities as follows. They provide the exchange trading system that includes the front end as well as the order matching server engine. Manage investors' fund by performing netting as part of the clearing function. Transfer of funds as part of the settlement mechanism. Act as the depository of cryptocurrency. Provide wallet facility for storage of private and public key. Manage the issuance of new coins and tokens through public offerings. Equity exchanges mandate a clear segregation of funds between proprietary on-account and client account. Cryptocurrency exchanges do not have a clear demarcation of proprietary funds and client funds. All the cryptocurrency holdings are only book entries, that is, commingled until the actual transfer to a cryptocurrency wallet is executed. Stay tuned for the next session to continue your learning.